Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 127. And today we're going to take a look at technical analysis case study as far as Tesla goes, and we'll do a little bit of practice. So ultimately, this is great if you're just getting started with technical analysis or you want to learn a little more about technical analysis and you want to break apart a chart in great detail. So that's what we're going to do is we're going to take a look at this chart and we're going to look at it and we're going to break it apart in detail. If you're just listening to me rather than watching the video, I highly recommend you take a look at the video, but I will give you some key insights of what to watch for as well, even if you're just simply listening. And of course, before we go in detail on this, keep in mind that none of the stocks here are recommendations to buy or sell. So always consult with your own personal financial advisor prior to taking on any trade. In either case, let's take a look at the chart. I'm going to use a drawing program here to illustrate this example. Now, in order for us to really break things apart and understand investing and looking at charts and evaluating charts, it's important that you remember that when you're looking at charts, when you're studying and evaluating charts, the point behind looking at charts is to predict future price movements. But in order to do that, you're really understanding how a stock moves, behaves, how it acts, what it's done in the past, and what you're expecting to do in the future. So for example, if you're looking at, back when Michael Jordan was very popular, and he scored a certain amount of points every single game, then more than likely the next game or the next game after that, you would expect a certain type of result time and time again, because that's what that type of player or person did. Now with stocks, they also have their own. Tesla has a certain type of group of traders, not only because it trades at a certain price range, but simply because of the people that are attracted to trading this type of stock. Now, granted, there are some day traders, there are some swing traders, there are some longer term investors, but in general, it attracts a certain type of person. If you're looking for like a Microsoft or a Bank of America, those attract, again, a different type of person. Sometimes those things overlap, but in general, you have a type of person that gets attracted to these types of stocks. So in either case, when we start looking and evaluating these charts, you're really looking at human behavior. And that's what the price ultimately tells you. It tells you about human behavior, what they want, what they don't want, how things are acting, behaving, and when things are running out of gas or fuel. Because when you're starting to look at uptrends or trends that are moving to the upside, so taking a look at this upward trend right here that we have, let's just make it a little bit thicker. So as you look at Tesla here and you're looking for this uptrend that we've had, eventually these things run out of gas or fuel. The more steep these things move, eventually they just run out of gas. You can't keep pushing a rocket ship to the moon without, giving something back. Eventually it runs out of gas, at least in our current environment and state that we live in. So in this case, the same thing, the same concept. As you continue to move higher, eventually this is why you need pullbacks. So when you see things, when you see these things continuing to move higher, that's why eventually you get these pullbacks that are also, allow that stock to continue to move higher or digest or consolidate, because stocks, they don't go straight up. And I think if you've been trading for a little bit of time, you know and understand that. So in either case, one of the things that I look at when I first look at charts and when I first start evaluating a chart, and I'm slowing it down, ultimately I do what I'm about to share with you within just a few minutes. But one of the things that I do is I've kind of tell myself a story, especially when I didn't know or understand how stocks moved and behaved a little bit more. I used to tell myself a little story, and when it comes to that, it's kind of an interesting concept, because when you tell yourself a story, it makes things a little bit easier, because humans, we think in terms of stories. So when it comes to Tesla and we start looking at this, you can see this stock in 2012, 2011, 2012 was just moving a little bit more sideways. It was under the $50 range. So the story here is basically this stock was just an initial company. It was just getting started and building energy and momentum. it was still getting its factories going, it's getting its exposure, the marketing that was happening. And people started to build into buying this stock. And as they continued to build into this, eventually, right around 2013, early 2013, you had some catalyst, a news catalyst, some awareness that started to happen, and more people got excited about what this company was doing. There was a lot more to the forefront of this company. And when this happened, this stock started to explode. And you can see that by this big wick, by the big candle bar that happened. When this happens, more buyers continue to step in because there's more excitement, and we continue to move higher to the upside. Now, you could go ahead and discuss every bar and every tick here, but in our sake, for our examples of evaluating the stock chart, we're looking at the bigger picture. So the stock had a really nice movement to the upside up until about the end of 2013. So in 2013, it's made its presence known. Once its presence was known, so many people got into the stock, it needed a pullback because it was just too far extended. It was starting to run on fumes. The valuation for how far it went in a short amount of time was far stretched. And if you look at the moving average here that we have and compare it to, at the highs, the distance there is much greater than if we look at somewhere in June. The distance is a lot smaller. So in either case, you can see it's quite stretched. So what do stocks do when they get overextended? Well, they pull back, and that's what happened. So this stock needed a little bit of a breather, a little bit of a calming down period to acquire new investments, to get more value. Also, the earlier people who got into the stock at these earlier points started taking some profits. So in either case, we loaded the gun back up, we loaded the spring, we got more fuel, we took a breather right here, a detour, and then we got more gas. After we got more gas, again, we were on our road trip, we continued a little bit higher, and the stock continued to power to the upside again, once more. Now, again, over time, things get a little stretched, extended. We're coming towards the end of our tank, and we need a little bit breather. So what does the stock do? Again, towards mid-2014, we have a slight little pullback again. So ultimately, this is what you do if you're telling yourself a story. Now, the stock continues to move in this wave-like pattern for, over the next year or two, but we slowly start running into roadblocks at higher prices. So this is where the problem starts to lie with this stock. So we're starting to move, but we're not moving as fast. The stock now becomes a lot more known. It becomes more available to the public as far as news goes, as far as awareness goes. So the price that it's priced in, it needs to start hitting things in perfection for it to continue to grow. And that becomes a lot more difficult because they are innovating. So over the next 2015 and 2016, we've ultimately been moving kind of in a sideways pattern between the 175 and 270, 280 level. And in there, we've had some ups and downs, but ultimately on a bigger picture scope, we've had some sideways actions. So if you break this apart again once more, you can see that at the beginning, we really had a accumulation stage. Then in the next part, or in the next phase, what we did was had the next stage, which was that growth stage, the stage where we had that upward movement. Initial investors started to come in. And then from then on, we've kind of been in a somewhat distribution or consolidation stage, or just moving sideways. So you can see that this is how you're really looking at a stock when you're starting to break it down. Now, when we start looking at some more technical patterns and technical evaluations, you can start looking at things like ABCD patterns. And as you start getting more specific, you can look at ABCD patterns on the weekly, which is the chart I'm doing it now on, or you can look at it on the daily, you can look at it on the monthly. I'm doing it right now on the weekly because it's easier to see and easier to spot, especially as a teaching example. So first off, where are ABCD patterns and how are they formed? Well, they're usually based on swing points. So where the stock changes directions, that's what a swing point is, right? So just look at where a stock kind of changes directions. You get an idea of swing points, right? So when we start looking at ABCD patterns, what's interesting about them is they talk about human behavior. They're really telling you about just the cyclical moves in a stock, in a rhythm, in a pattern. Just like you have a sleep pattern. Typically most humans go to bed at, let's say, 10 o'clock at night, and they'll wake up by 7 or 8 o'clock in the morning. So you have that sleep pattern that you continue to go through day in and day out. So you have that pattern. And ABCD patterns are very similar. So if I plop A right here, where the stock changed positions or movements, then we go to the B over here at the next point where we had a change or shift. Then we go to B to C. We had that little pullback, and the C to D. And you can see how that really works out in terms of the patterns. And if you start drawing things together and connecting these, A to B, B to C, C to D, you can really see that pattern standing out. Now here, we'll draw a couple more patterns just so that you're aware that ABCD patterns don't just have to happen to the upside. But let's just go ahead and do another one here so you can see. Okay, so let's go ahead and do another ABCD pattern. So we can start right there, A to B, B to C, C to D, right there. There's another ABCD pattern. So hopefully you can see that. Basically went from 2014, the B to C was around March, April, came back, and then the C to D to the upside for those of you just listening. And then also you have them to the downside. Now sometimes they're not as clean, but I will still share with you how those look, and that way you get an idea. So we had a downward ABCD pattern in 2015 to about 2016 in Tesla, and we'll go over that here in a little bit. But here you can see there's another nice and clean ABCD patterns. Yes, there are other ABCD patterns in between that, but right now I'm sticking and showing you the clean patterns, so that way you learn what you're looking for. And once you learn what you're looking for, you can, of course, look for subtle little ABCD patterns, like there is one, let's just say over here in the end of 2014, 2015 level. So here's another one that you could say, okay, it's kind of an ABCD pattern, but it's not as clean. So this is why I'm not using it as a teaching example for the time being. Instead, it's better to focus on cleaner patterns, so that way you know and understand what's going on. And once you know and understand what's going on with ABCD patterns, then you can modify these, manipulate these, and view them on your own terms and on your own charts. Now here's the other interesting fact behind ABCD patterns is when you're really looking at ABCD patterns, what you're ultimately looking for is you're looking for the volume to confirm this pattern. So as we look at, let's just say, a 2013 ABCD pattern, what you want to look at and see is the volume. How is that volume coming into the stock? Normally, from the A to B pattern, you have massive volume coming in, or good volume. When you have volume, you have gas in the gas tank. And in this case, you can see that we have volume coming in, and we have the wide price spread that follows through. And that's why you continue to get the follow through on that movement. Now, when you start getting a pullback on the B to C leg, okay, so as you do the B to C leg, this is typically lower volume. So as you get into the next stage, it might even appear that it's higher volume, but ultimately if you compare it to the previous volume, it should be lighter volume. Okay, and then finally the next leg you usually want to see, which is the C to D, you'd usually like to see, again, heavier volume to the upside from the C to D leg, heavier than the B to C leg. This is not always the case. I found over the years is that you may actually see some lighter volume, but the expansion can still be pretty good, or you still want an increase in volume. So for example, if you notice here in Tesla right at 2014, even though we don't have heavier volume than the retracement B to C, we still have kind of an incline in volume, where the volume starts to kind of grow. So again, as you can see, it's not always the case, but that's what you want to see. Now, this is the same thing when it happens to the downside. So if we take the 2015 movement to the downside right here, the A to B, you can see that it's slightly, the red volume is picking up, okay? The bearish volume or the big sticks on the red bars are picking up. As we get this retracement, which is the B to C, which moves to the upside because this is a bearish pattern, you can see the volume is very light. It's contracting, okay? And when we're talking about the bullish volume, you can see it's a lot lighter. And then as we get our next break lower, again, which is the C to D, you can see that volume picking up again on the bearish end. So that's typically what you'd like to see on these charts, and that's what makes a great price movement, meaning healthy. That's healthy. If you see a stock moving in a direction with lighter volume, that means there's less gas. That means there's less conviction. It's less likely to stand the test of time. It's less likely to continue moving in that direction. Doesn't mean it can't. It just means it's less likely to continue. So that's why we always look at volume as a clear sign or indicator for future price movements and actions and behaviors. So in either case, if we backtrack a few things and we start looking and evaluating at this chart as a whole, you're combining multiple things together. You're combining ABCD pattern, you're combining the price action, how the price is moving, meaning these wide bars from the open to the close, and then the volume. And you're putting those together to create and evaluating that chart. At least that's the simple and basic form. Now, of course, you could use other indicators to help with this, but ultimately I find that the more complex you make things, the more cluttered your mind becomes. So keep things really simple. Now, as we look at the chart as a whole, and as we evaluate this chart, one of the things that I always like to stress is you start comparing these charts, and you start comparing them to the previous volumes, which we'll get into here in a second. But one other point here, before we get there, is when you look at retracements and pullbacks, a typical retracement is 50%, and that means nothing is wrong with the stock. Now, you can get other retracements which are 61.8 or 38.2, but it's based on Fibonacci sequence. And this simple thing behind Fibonacci sequence is it's just a way to gauge retracements. Really, Fibonacci numbers are mathematical numbers that when you add the first two, you get the next one, then you add the next two, you get the next number, and so on and so forth. And they continue moving along those lines. But as you put them in charts, it allows us to predict human behavior a little bit better. Now, these are not, let's say, magic numbers or magic formulas that are going to give you perfect answers every time of when a pullback is going to stop. So, but it'll give you a guideline, a baseline of what's a healthy pullback and retracement. So if we take this initial movement and we look at this stock overall, when you start evaluating this, you can see our pullbacks here are 50%, 38.2, 23.6, and 61.8. Normally, I focus on 50% and 61.8. Those are the main ones that you want to focus on. 38.2 as well. The 23.6 I've seen, it doesn't hit as often. But if you look at this, and we drew the line here from the lows or the swing point to the highs right here, you can see what these lines really tell you, that right here, our pullback comes right at 50%. So you can see if I draw that line all the way across, you can see we're hitting right at 50%, right? Now, the other important thing you can remember is the projected move. How far do you expect the next move to go from the C point or after you get the retracement? Well, typically, if you measure A to B, you typically will get the distance from C to D. Okay, so in this case, let's take a look. So from here, if we take our numbers, call it $40, or we'll just draw it up here, and you can see it here on the left box, you get about 155 points on the left. Okay, now, if you draw the same thing from the lows of point C, and you go all the way to D, you get about 148 points. So about 5 points off, which is not a big deal when it comes to stocks when you look at the bigger picture. But you can see it's very, very close when it comes to the projected move. So you can see we have our A to B, we have that projection about 150, 155, and then right here, C to D, we have 147, 150. Again, there's our projected move there as well. So it's really interesting how this works out. And if you look at the next leg or the next stage, so again, we have our A to B right here, B to C, and C to D. If we look at this measured move right there, you can see from here to here, we have 147, and then from here to here, we also have 114. So a little bit less, but the move is still kind of in that range, give or take. You know, it's not going to be perfect in the market. Now let's take a look at the retracement here on this next leg. Okay, so if we look at it from the retracement of 2014 on that movement, the pullback, we went from about $130 to about 264, and we pulled back to about what was that, about 180, 190. So if we look at it, about 180, and you can see that it pulls back right into that 61.8% level. It's really interesting and fascinating how things work out in those ways. Let's take a look at the bearish example that we had, let's say in 2016 right here. Okay, so here's our projected ABCD pattern, okay, right here. So we have kind of A to B, B to C, C to D. So it's a little bit different looking. It's not as clean, but gives you the same kind of concept. You could even say that you had a smaller ABCD pattern right here. So that's another one as well to look at. So in either case, let's look at this one real quick at the bigger scope of things. Okay, so here's our ABCD pattern right there. You can see we're coming in on this retracement right there to the 50%. So notice the 50% there. There's our resistance. Here is our retracement, and there's our A to B, okay, B to C, and C to D. Okay, so that's what we have right there. Our pullback is into the 50%. Okay, the measured move right here from A to B, we call it 78 points. And from here, highs to here, about 92 points. So again, about 20 points off, but very similar. You know, it's not going to be perfect, but it's very similar. So again, that's very similar to understanding the moves. Now, if we look at the volume of these movements, so again, here is our A to B, B to C, C to D. If we look at the volume, you can see the volume is building right here on the downward leg. Then as we have this retracement, just look at this retracement right there, that retracement that we have. If you look at it and you go straight down and look at the volume, our volume is drying up, and then all of a sudden on the break, the volume picks up. So that's exactly what we're watching on these moves and on these measured price moves. And that's what you get. You get a nice clean movement in the stock when you're watching these things. So ultimately, when you're seeing these things and when you're looking at ABCD patterns, when you're looking at these swing points, when you're looking at measured moves, this is your money leg. Typically, the C to D is your money leg, okay? Once you find the A to B, B to C pattern, the C to D is that money leg, whether that's to the upside or whether that's to the downside, that's your money leg. Now, of course, you can play things in ranges. So just like we have sideways patterns right here in the stock right now, you can play things in ranges, but ultimately these ranges are not as big in terms of price movements as a C to D or an ABCD pattern. I often find beginners struggle finding ABCD patterns, and this is partly due to the stocks that they're looking at, but also just their understanding of ABCD patterns. So if you struggle finding ABCD patterns, it's important that you just simply move on to another stock. And that is because you're either looking for something that's not there or you're forcing the trade. If you can't find an ABCD pattern, move on to another stock. And I'm going to show you some examples of some very popular companies, and the reason why they're popular is because they move in the appropriate behavior. Also, they have enough volume. If you're trading stocks with low volume, penny stocks, those kinds of things, sometimes it's difficult to find ABCD. But in general, with most stocks, you can find ABCD patterns. Okay, so let's take a look at a few quick companies and you'll get an idea. So again, I'll backtrack this to Apple, just exactly the same thing what we just discussed. So here, if you take a look, here is our A to B, and then B to C and C to D pattern. Okay, if we take the measured move from A to B, it should equal similar to C to D, and this pullback from B to C should be about 50% give or take. So let's take the measured move right here, and you can see it's about 90 points, 88.7 points. And again, you can see that right over here in this box. Okay, so that's 88.67 points, but call it 90 to make things simple. And then here our movement to the upside again, it's about 80 points. So very close and similar. If we calculate this pullback right here, let's just take a look. You can see here with our Fibonacci sequence, there is a 50% pullback, hits that line perfect, and then takes off to the upside. So now looking at this next price movement that we have, can this be forming another A to B, B to C, C to D pattern? Absolutely. So again, let's take a look from here to here. We have right there, it's coming in, it's hitting right around 50%, similar on the pullback. So there it is, there's our line of support. It's also hitting the line of resistance right here of the previous one. So it's coming back to retest it. And if you do the measured move, do the calculation right here, you can see that we get about 80 points. So we're looking for potentially a target of, if we move this down, call it 80 points, right around 172 for this stock. And that's how you get a basic target for the upside. Now, of course, one thing we do want to pay close attention to is the volume. Okay, so I normally want to see larger volume to the upside here. Now, with this stock, unfortunately, we got a little bit lighter volume than here on some of the pullbacks. And this is not one thing I like to see. It's just, it can happen, but it's not something I like because I always want to see the volume going with it. And again, if I go into the weekly chart, you want to see more volume coming in as we're moving higher. And on these pullbacks right there, you want to see lighter volume. And this is not the case when it comes to Apple. And you can see the volume's also dying down as we continue moving higher, which is not normally a good case. But again, it doesn't mean the stock can't go higher. It just means I'm more cautious about these stocks as they continue to move higher. Especially if they have less volume. Okay, and again, you have smaller ABCD patterns within this because again, even to the downside, if you're doing calculations. So you could trade those, but usually keeping a bear market, the downside movements are usually smaller in terms of time frame. Let's take a look at Amazon. Amazon also had, quite a handful of good ABCD patterns. So you could tell right here, here we are on a weekly chart. There's an ABCD pattern right there from 2015 to 2017. Very powerful stock. Let's do the measured move calculation. So here we got 390 points. So I would expect from the pullback, we also would get about 390 points. And you can see we got about 365. Okay. Now, when we take a look at the pullback, at how the pullback came in, what was it? Well, you can see we came right into about 50% into that pullback and bounced at the 50%, almost right at the $500 price level. So again, stock did a classic move, okay? And what did we get later? Well, you got volume coming in on the break, okay? Here, notice these high peaks, okay? At the highs, you had nice volume on the bullish side. So that's a positive. Now, granted, you did have some selling action that came in right here, but you did have this drying up in volume just slowly after the little pullback. And then finally, you got more massive buyers coming in right after that. So in either case, this stock looks like a classic ABCD pattern, just like we've shown with Tesla, just like I've shown you with Apple. And if you really look at the monthly, you can see it right there as well. So from the 2015, there it is, ABCD. It's moving right along those lines. So when looking and evaluating these stock charts on a simple level and a basic level, you could take just about any stock, and we can do the same thing even with GoPro. And as you start evaluating things, and looking at stocks, let's take a look at a 2 or 3 day here in this stock, because it's going to be a little bit easier to evaluate it and see the charts. When we look at GoPro and we look at it to the upside right here, just what we had recently, again, we could say, okay, well, this started off very similar to Tesla. Consolidation pattern for a few months. July, August, we just moved sideways. And then we had coming in volume, nice bullish volume coming into the stock. So people got excited about it, and then finally we had a slight little pullback. Okay, we needed to take a gas break, and you can see the volume drying up right there, right under the stock. They're drying up. And then finally, we have more volume coming in and further extension of prices. Okay, we had a slight distribution at the top, and then the stock continued to head lower. But overall, if you do the classic movements here, okay, you have the accumulation, you had the upward move, but let's take a look. Okay, so we had this upward move right here. We had a move of about 33 points. Okay, then let's look at how far the pullback was. Okay, right here, pullback came in too, it was a lighter pullback, 23.6%, and then the stock bounced. Okay, so we came into a 23.6% Fibonacci sequence, and then the stock bounced. But overall, the movement from here to here was right around 32, 33 points. So if we take the lows of that B point and we go to the highs, you can see, look at it. We hit it nearly perfectly, 33 points. Look at that. And there is your classic A to B, B to C, C to D pattern. And if you don't know much about technical analysis and you want to keep it simple, you could just do exactly what I've shown you here, is look for the A to B classic pattern, look for that volume to come in, wait for the drying up of volume, and get in on the C to D leg, and take most of your profits as you approach closer and closer to the D leg. Now this works the same way in reverse, and this is why GoPro is a very nice example, because you could see it to the upside, but you could also see it to the downside. Let's go into right here as we're getting into the stock and it starts its sell-off and then the counter trend bounce. Can you calculate what's going to happen? Well, here, as we have this stock moving lower, you can see we moved down about 58 points from the highs. So I'm taking the high bar over here. We moved down about 58 points. We also had this retracement right here to the upside. Okay, so we had this retracement. So again, we have the A to B, okay, B to C, and now what can we project from there? Okay, so here we had 58 points. We had a retracement of about 26 points, which if you do the Fibonacci calculation, okay, take it from the top, move it down, you can see we don't hit this perfect at the 50% or 38.2%. If you do it more around the distribution area right here, rather than the wicks, you'll get it a little closer because sometimes here was euphoric buying. It just depends on the stock movement. But here, when we do this calculation for the 2015, you can see we're hitting it right at 50%. So again, some resistance right there, drying up, trying to break higher, couldn't do it, so stocks continue to roll over. So again, what do I estimate? Okay, so we take it from here to here, 55, 58 from the highs, 55 from the good average price point. So from here, from 63, take out 55, and as you go down, you'll see what happens to the stock. We go 53, 54, 55, and we got a price of $8, and that is exactly where we hit. So now what's going to happen to the stock? Well, now we're back into this accumulation stage. And oftentimes I find that IPOs that get into these ranges under $10, they're very difficult to break out of these ranges. And sometimes it takes multiple years, 3 years, 5 years, 10 years. It's very, very difficult. But you can see the patterns here in this stock were very classic when it comes to the ABCD to the upside and the ABCD to the downside. So in either case, I hope this was helpful for you in understanding these price movements. Keep in mind, you're looking for the ABCD pattern first. What is it that you're looking for? It's the swing points. You're looking for also volume. As the volume starts picking up, Here was the selling pressure that picked up. Then we had a retracement with lighter volume, and then more selling volume picked up. And you can see that happening right there. And the selling pressure stayed there until we hit this low point in early 2016 with GoPro. And now we're just distributing sideways and continuing to sell these stocks short. So looking at these evaluations and stocks and prices and ABCD patterns, you can see you don't need a lot of fancy indicators to really be able to evaluate a stock on a simple level. Now, yes, there are other things that you'll go in detail as you continue to get better. But if you're just getting started, this is a nice starting point for you to start evaluating charts. And if you go to a certain stock, let's just say PepsiCo right here. And if you go to this stock and you cannot find an ABCD pattern, you start looking for it and you can't find one, then move on to another stock. But I'll show you this right here, kind of have a AB, and sometimes the B to C leg or C to D leg is a little more extended. If you go to Goldman Sachs, the same thing. If you can't find ABCD patterns, move on to another stock, especially in the more recent time frame, because that's where you're trading with. If you're trading in the more recent time frame, if you can't find those ABCD patterns, like with Bank of America, the same thing, move on to another stock. But ultimately, they are there. They're just not there shining red lights at you saying, hey, this is the ABCD pattern. You have to be the one that looks for them. You have to be the one that shows up and listens to the stock. And here you can see with this stock, you have this massive volume, and that's a key sign. When you have a lot of volume coming in, that usually helps find ABCD patterns. So again, in this case, what's interesting is this case, the B to C is actually sideways. So keep in mind that B to C doesn't have to go down. It can also be sideways. So again, you're looking for an expansion move. On these stocks, typically the targets don't always get hit. It's just giving you some ideas and examples. But look for those patterns. It doesn't matter what company you're looking for, whether it's Target, right here, taking a look, whether it's a Target, here's the ABCD patterns, whether it's a Macy's, whether it's a GoPro and Amazon, they are there. It's just you might not be seeing them. And if you can't find them, just move on to another stock. In either case, thanks for joining me. Hope you enjoyed this week's video lesson. Keep practicing technical analysis. And in the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.